Ken Zener from KeyBanc now. He just lowered his price targets on KB, Lennar, and Toll Brothers, citing the Fed tightening set to begin this week. Ken, this has been a big theme of yours, and this underperformance is striking this year. Will it come to an end here or not?
Afternoon, Kelly. Thanks for having us on. We looked at, within our WOW thesis, which is wall of worry, how macro concerns can supersede strong fundamentals. What has happened this year so far. We do expect the home builders to maintain their weakness. That's our price target revisions, simply because the builders have never bottomed prior to a Fed tightening cycle starting. And I know the 10 years moved, but historically, the builders find a bottom roughly at the last quarter of the Fed tightening cycle.
Wow. Well, this could be a 2-year-long tightening cycle if the economy holds up.
Yeah, and we've had a lot of conversations around, if you look at the builders, trading anywhere from 3 to 5 times earnings, historically a low valuation. The group is, just a little over 1 times book. Book value is our preferred metric because earnings, even the fourth quarter this year with rising interest rates and still rising input costs like lumber, is questionable. The fundamentals remain strong, but we do focus on the book value. Book value does reflect builders' return on inventory, and there's big differences there. That's why we have a dispersion in the valuation. But on the macro front, we cannot see a bargain opportunity before any sales in the actual end market have begun.
It's just striking how awfully a lot of the housing stocks are trading, the builders, the lenders. And meanwhile, the flip side of it is you've got people desperate to buy a house to be able to get into this market. So where do you think the fundamentals are headed over the next 6 to 12 months? Do we need this reset in order to get a healthier market long term? Well,
in our WOW thesis, we do start our analytics in 1969. I would point out the $5 trillion that has ensued in the last 2 years has certainly helped asset appreciation, homeowners, more than renters in many ways, along with the supply constraints. But there's a lot of, interest rates are negative if you look at the 10-year minus CPI or PCE, and that is really an anomaly, even compared to the 1970s, how deep we are in terms of a low interest rate relative to the headline inflation. So I don't want to predict the nuances. I just think it's too early to start buying the home builders, and the bias is towards the downside.
So as we go, tell me why you still do rank NVR, I believe, as at least a buy, if not an overweight.
Yes. NVR with a land-light model and the highest return on inventory stands apart from many of the builders because it's earnings. So it's trading at roughly 11 times earnings and book value, 4 or 5 times because it's bought back so much of its stock already. But that earnings really is much more of a cash flow number, which they deploy in buybacks and have done so for quite a while. So it's a very steady, low-risk model. We're simply looking for the best builder in a tough narrative.
All right, and that is your pick. Ken, thanks for joining us to share all your thoughts today.